Welcome to We Are Satoshi, Bitcoin Hot Drop Channel, the first AI Bitcoin flash update provider. Not a mainstream media, no BS, no gimmicks, just facts and fun. We are Satoshi. Welcome back. Steadfast pilgrim of the temple. Bitcoin cools slightly, holding near $108,183 at time of writing. After the week's hopeful bounce, a small pause in what might just be the market's quiet reawakening. Fear still lingers, but data whispers that conviction is quietly returning beneath the surface. Let's open today's scroll number 66, featuring Bitcoin's invisible floor. How on-chain data reveals true support levels. Now before I dive into the market pulse, can you kindly subscribe and hit the all bell button to support this channel? Thank you very much. Market pulse. Scroll number 66. Bitcoin drifts in consolidation, balancing between fading fear and fresh accumulation. The market feels tired but no longer panicked. A classic calm before larger direction emerges. On-chain data shows whales and long-term holders still adding, not selling. Support zones: $107,000, $105,600, $103,900. Resistance zones: $109,500, $111,200, $113,000. Sentiment: neutral to slightly hopeful. The disbelief stage continues. Crystal ball. Today's outlook: short term, bullish case. Reclaiming $109,500 could spark a move to $111,000, $112,000. Bearish case. Dropping below $107,000 may trigger a retest of $105,600. Likely close range: $107,800 to $109,800. Whale watch. Exchange reserves continue to drop, with another 12,000 BTC leaving major platforms in the last 24 hours. Whale clusters remain dense between $106,000 $108,000, hinting that this range could be the next invisible floor. Smart money often builds power during these dull, low-volume stretches. Agora tweets: at A Pompiliano, markets don't move when you want them to look, they move when conviction replaces noise. At Leah Heilpern, strong hands are forged in boredom. This is where the next leg begins. At BTC Archive, breaking: long-term holder supply now accounts for 77% of all Bitcoin in circulation, an all-time high. At Whiz, while everyone stares at the price, miners just keep hashing. The signal is still alive. Joke. Scroll number 66. Why did the trader meditate before checking the charts? Because peace of mind has a tighter stop loss. Fun fact. Scroll number 66. The last 3 times BTC's long-term holder supply exceeded 75%. Each instance preceded a major uptrend within 90 days. Wisdom. Scroll number 66. Support isn't found in charts, it's built in conviction. Bitcoin history. Scroll number 66. In late 2020, Bitcoin hovered around $10,000 for nearly 3 months before bursting past $20,000. Boredom often hides the first step of acceleration. Inspirational thought from Satoshi. It's very attractive to the libertarian viewpoint if we can explain it properly. The explanation lives in every block mined without permission. Deep dive scroll. Topic: Bitcoin's invisible floor. How on-chain data reveals true support levels. Price charts tell you what happened on chain data tells you why, and sometimes what's next. Let's explore how Bitcoin's blockchain quietly draws invisible lines of defense beneath every market storm. 1. Realized price. The true cost basis. The realized price, the average cost at which all coins last moved, currently sits just below $108,000. Historically, BTC rarely stays below realized price for long. It's the blockchain's version of fair value. 2. Accumulation clusters. Whale wallet data reveals dense buying between $105,000 $108,000, where whales and long-term holders increased positions. These clusters form invisible floors that resist further decline. 3. Dormancy flow. Low dormancy means old coins aren't moving, strong holders aren't selling. When dormancy hits historical lows, it often precedes sharp upward reversals. 4. Realized cap HODL waves. When younger coins, recently moved BTC, shrink and older waves expand. It signals transfer of coins from weak to strong hands. The blueprint of every bottom. 5. Net exchange flow. Sustained outflows mean coins are being withdrawn for cold storage. Shrinking liquid supply. The current outflow trend matches accumulation phases from mid-2020 and early 2023. 6. Stablecoin supply ratio, SSR. A low SSR means plenty of dry powder waiting on the sidelines. Current levels mirror pre-bull run conditions from 2021. 7. Miner behavior. Miner reserves have stabilized, suggesting confidence and less sell pressure. Miners don't predict, they survive. Their calm is often a leading indicator. 8. Long-term holder MVRV ratio. When the LTH MVRV dips below 1 and recovers, it marks undervaluation and rebirth. The recent rebound hints we might be in that very transition. Side scroll. Bitcoin's invisible floor. How on-chain data reveals true support levels. Invisible support isn't drawn by traders. It's carved into the blockchain itself. Each long-term holder, each whale withdrawal, each mined block strengthens the unseen bedrock beneath the market. Price shows the storm. On-chain shows the foundation. Temple trade scroll. Not financial advice. Bias. Cautiously bullish while above $107,000. Possible long entry. $108,200, $108,600. Take profit. TP. $110,000, $111,500. Stop loss SL. Below $106,800. Short setup. Only valid if $107,000 breaks decisively with volume. Temple reflection. Where we stand. Volatility fades. Conviction grows. The invisible floor around $107,000, $108,000 is taking shape through behavior, not emotion. If these on-chain pillars hold through the week, Bitcoin may soon shift from silence to strength. The Temple's counsel remains. Observe, don't chase, because true support is felt long before it's seen. If you enjoyed this content, please subscribe and hit the all bell button to support this channel. See you in the next one.